ladies and gentlemen. I also would like to add my voice to the previous speakers and congratulating KCGF for 10 years of great activity. The report was very clear, important role that KCGF has played in Kosovo's development over the last 10 years. Having listened to the two very interesting presentations, the experience of KCFG over the last 10 years and also the Finnish experience of the Finnvera development bank supporting exports. In this session, we want to explore how can Kosovo move from the present stage to a gear up. In some way, there is this middle income trap. Many countries are suffering from low growth rates. They basically manage to move on a little bit every year. They need a jump. Of course, we're here only concerned with the financial markets and the financial side of how the economy can move from the present to a higher growth stage. And there is clearly a finance gap. And the question is, how can this finance gap be filled? While markets are not distorted and the operational market economy continues. We have here 4 colleagues who can contribute to this discussion given their wide experience of financial market development work and academic work and research. Professor Krasniqi was in the list of top 2% researchers in the world in 2024 and is one of the most promising young economists in the Balkan area, not just in Kosovo, but around the world. And his experience would contribute a lot. Other colleagues have practical experience of development work in KfW Development Bank and World Bank. World Bank, of course, is a premier development bank in contributing to development around the world. And of course, Governor Smiley, Governor of the Central Bank of Kosovo, who oversees the financial markets in Kosovo and has an interest in financial stability as well as controlled inflation. So from different angles, we could approach this question. So I'll pose one question and I'll go around and asking colleagues what is their take on this. And then I'll come back and ask another round of questions. And then, of course, the audience will have an opportunity to ask questions as they were directed by putting their questions, and the questions will appear on the screen. So I'll start by referring to our Glenna's presentation. The Kosovo Guaranteed Fund has done a great job with over €1 billion of loans, 500 million guarantees, but has only served about 13,000 enterprises, meeting the credit needs of these. Now, Kosovo's development strategy requires a greater amount of credit for enterprises, particularly enterprises that cannot be served by ordinary financial system, by the banking system, because they are either they generate externalities which cannot be quickly monitorized, internalized. There is the micro and SME sector, which is very large. I mean, 13,000 is only about 5 to 10% of total number of active enterprises. The rest of them also have needs for credit. And of course, there are sectors such as renewable energy, the green transition, they may not be able to find loans on standard competitive rates, on the market. So, and these are important elements of development program. So, what, on the basis of colleagues' experience, what other mechanisms and instruments are available or can be developed to serve the massive hidden needs of these enterprises for credit? So I'll start with that question. Maybe I start from this side. Governor, please.
Thank you very much, Professor. First of all, let me just give a little bit of background and connect to what you have already mentioned. So it is true that KCGF has been and continue to be very important instrument to improve access to finance. And the data that Albertina showed, and when we were discussing with the director of the fund, I suggest that we should have some impact assessment because it's measurable. And I think it's clear that the fund has served for, let's say, relaxing some access to finance conditions, especially in collateral, extending loan maturity, as was mentioned, but as well letting more financing. Because sometimes access to finance is not a question of whether you are financed or not. It's the question: are you enough financed? Sometimes you might have under financing. So you might need, I don't know, 1 million, but you get 500,000. That's not enough, and sometimes that could not let you achieve the plan that you have as an investor, as a company. So in that regard, I think the study was very informative, but it's true that the KCGF alone is not enough. Even though we have to admit that the financial sector, especially the banking sector, has been very much supportive to our economy. So I can illustrate just a few examples. Intermediation rate, which is calculated usually loans against GDP, in Kosovo is highest in the Western Balkans. That was not the case with households, for example. We were behind, now we are converging, but that tells that our banking sector was really supportive to the financing. So besides KCGF alone. Second, it is because we are bank-centric. So as I said in the beginning of my speech, our financial sector is dominated by banks. So there are not that other instruments that can complement the bank sector. So that is in a way to just state that really what we have achieved is significant. I can tell you as well that, for example, loan-to-deposit ratio in Kosovo is like 90%. It was 80-85 for many years, which again shows the transformation. So they were, at the highest. In a central bank, from the central bank's perspective, as you mentioned rightly, financial stability is on our core. We pay very much importance as well how we balance our regulatory framework that would not, by any means limit the innovation, access to finance, and growth. And we fully believe that financial stability is a foundation, is let's say a base upon you can build the growth. So we believe that it's a public good, it's in benefit of all, and we should not by any chance compromise on that regard. But it is true that the next phase Kosovo's development finance architecture should complement credit institutions, especially credit guarantees, with a broader range of instruments, including equity, quasi-equity, and well-designed risk-sharing mechanisms. One of the presentations that we saw today from Finvera, and the motivation to discuss in this conference was as well looking for the last 10 years where we are, what would be the next step. So we are all, I think, here in this room agreed that there is a time to move to the next stage. Development of public-private venture capitals or co-investment funds is very essential, but as well it is very important to encourage as well development of business angels, ecosystems, and to structure differently diaspora investments channels which of course will require some initiatives from the government point of view as well. So mobilizing diaspora capital in more structured way, not only from financing what is happening today would be one example. Export-oriented enterprises require as well a different set of instruments. I think instruments such export credit insurance that was mentioned on a Finvera presentation and dedicated working capital instruments are very important. And we can tell from our side, in the central bank, we are very much engaged on supporting this export-oriented field in the area that we have done all preparation, and we hope that very soon we will be member of SEPA, which is single euro payment area, which will very much help businesses, especially exporters, so for faster, more cheaper, and much better connection with European markets. So we believe that moving toward European integration financially, the single market as well is very important to be a cross-border ecosystem.
Mr. Ismaili, can I go to the others and come back to you again?
Sure,
Is that okay?
sure. Yeah, sir.
Try to...
No, thank you very much. And first, let me start by congratulating KCGF. As you know, the World Bank has been accompanying KCGF since the origins. So it's wonderful to be here, and it's wonderful to see the results on the performance of KCGF in the last 10 years. Really, congratulations from the institution, a lot on transparency, accountability, I think really top-notch. So let me build on what has been said by Governor Ismaili. And I think the key point continues to be that KCGF is a very important institution. Institutions like credit guarantees are very important, but they are one piece of the big puzzle. And expanding access to finance really requires a broader ecosystem. So let me offer 3 points very briefly. First, I think we need to start by indicating that not all firms are equal. And the demands on the demand side, there are different demands that need to be assessed. For instance, innovative and startup firms will require more private equity, venture capital, while more established firms require a mixed combination of instruments, from being it working capital, trade finance, and investment financing. So that requires also a different set of instruments, but we really need to understand the demand in the first place. And when we think about in terms of instruments, there are some underused but very effective tools. If we think about factoring and supply chain financing, they allow really to transform invoices of firms into actually cash without collateral. Think about platforms like Threads in India, or examples like reverse factoring that are done through national development banks in Mexico, like FIRA. Those are specifically instruments that can be used and have shown the potential to actually have and unlock capital for MSMEs and broader firms. And third, I think nothing like this works without the right foundations. So you can think about digital finance and in a way solutions related to fintech that will allow you, using alternative data, will allow you to expand access, but you also still need the infrastructure for credit. Either credit bureaus, we have seen in the evidence that this is also associated with actually really access to finance for MSMEs. You will also need regulations and business support systems. In this respect, I think Kosovo is very well positioned because you have KCGF, of course, but offers to promote innovation, including open banking initiatives, and the recent innovation hub position you better to actually think what's the next generation. So overall, I think it's really about moving from one type of instrument institution to actually a whole system that really will help you do a transformational change, so which you can combine guarantees, debt, equity, and digital solutions to address firms and targeting them better, because their needs are different. And as we have been saying in the presentation, there are certain type of firms that will allow you to get a higher developmental impact, for instance, the export ones, the oriented ones towards exports. So that's it on my side. Back to you.
Thank you. We go to Hile, please, from KFW, again with a wealth of experience in working in various developing and transition countries. Please.
Yeah, thank you very much. I will try and bring in the requested practical aspects to it. So basically, I think you can do two things. You can extend the instruments within the existing institution, and this is my way to sneak in the congratulation, because there are well-established institutions and instruments. So if you specifically ask for certain target groups, we discussed that yesterday evening already, let's say women entrepreneurs or startups are underserved, as it was mentioned before, there may be a way to, within these established institutions, have specific conditions for these target groups. So let's say you have a window for women entrepreneurs in this structure, or for green financing, or or for startups, for example. We do this in different countries, and it often is a very efficient instrument because you use what is there, you just tailor the product a little bit more, maybe pair it with some more assistance, maybe with grants, maybe not with grants. So that is one way of doing it. It will still not be enough. I think we all agree on this. And the second thing to do is to then really see what is needed in addition. I give you one example, what we often do in many countries. We support credit guarantee funds which tackle the collateral aspects, the risk aspect behind it. And in addition, we often look at the liquidity that is needed. By the way, this is changing. You said it before, conditions are changing, so it may require certain years where you look at the liquidity, and then some years it's not so relevant. One example is where we have lines, loans to banks where they pass it on to SMEs, and one thing that is, I would say, smart to do is to have a specific focus as well. So to see in which areas do you want to incentivize. Often at the moment it is green financing, and then you tailor the product. And then you have a mix. You have credit guarantee funds tackling the collateral, and you have loans with favorable conditions which then tackle the liquidity in certain sectors maybe only. Interestingly, in many economies we work in, liquidity in general is not an issue, but for certain areas. And looking at Germany, I think green financing, we still have issues there. So even in Germany that is the case. 4 points I want to point out, not going into detail because also some of them have been mentioned, but one is never substitute what the market can do in designing any of those instruments. Second is move more and more towards market conditions. We are talking of countries in transition, so Kosovo, I think it's important to see, to not go in with grants in any area always all the time, but to really see where and how it is still necessary and have this target. Third, as I mentioned, choose the topics wisely to see in which areas there is an incentive needed, and also limit it to a certain time. So to not incentivize for the next 30 years, but see how long it is needed, and then hopefully you have the companies who can apply at the market. And the fourth, I will just mention, I think we go into more detail, is to have an institutional landscape. It's what you mentioned as well. So to have solid instruments like KCGF, maybe also others, maybe the whole landscape, maybe certain institutions, but some that have a solid basis, and I think that's what you mentioned in the previous presentation as well, have a flexible, solid framework is one point I want to bring in, to then be flexible in catering for certain target groups or instruments, develop products. So maybe I leave it here.
Thank you. Thank you very much. We'll come back to some of these. Professor Krasniqi, would you like to?
Yes, thank you, Viray, and thank you, Credit Guarantee Fund.
I think
congratulations for the 10-year anniversary. It has been a remarkable achievement. However, I would like to raise some issues that could be further developed in order to have the full development achievement for Kosovo. In order to discuss this issue, we have to have an ecosystem approach, and I agree fully with previous presenters that credit guarantee alone cannot be sufficient in order to compensate for the lack of access to finance or difficulties in access to finance. Referring to the Alburena's presentation, I just made some notes about the maturity, which is 39 months, which is very short period, and also we have small size loans, which is another issue, which basically I was not surprised to to see that not much productivity gains we had from this credit guarantee fund in those companies. Another issue is how we could move from this facilitation role into the more development role, and how we can make an orientation of the funds allocated to specific sectors in order to increase the productivity gains. Another issue is underserved group of startups, because we are talking here about companies that are established in an initial stage, that you have some track records and they can access banks or have difficulties to access, but there is a large group of startups with really high potential, especially in the tech sectors in Kosovo, that are underserved. According to the current ecosystem, there are missing pieces of business angels, venture capital. We need acceleration. There are a lot of programs, I mean, backed by government or donors that support startups at the initial stage, but scaling up remains a really huge problem, and we need to see what kind of instruments we are needing for this. I see a huge need for blended finance and combining these instruments with other instruments that are in place. I fully agree that we need, innovative companies, and in order to have that, we have other instruments. For example, voucher funds, innovation funds, R&D vouchers that are being provided, or there are real plans to be provided by government funding, should be combined with these credit guarantee funds for further funding. Export is another issue that we will probably discuss later on, because we need to concentrate in some productivity sectors that could, develop competitiveness of Kosovo. And the one issue that I want to raise for discussion with other colleagues as well is how we could link these instruments with the national development strategies of Kosovo. As I can see, this is more general approach to target the all sectors and the companies and to have facilitated role. But I see that there is a missing link between these instruments, national strategies, and how we can, as was framed within this panel, avoid this middle income trap that I see that we are very close to it.
Thank you. Just to summarize and move to another question, colleagues referred to a number of separate instruments, but one thing you mentioned angel investors, and others mentioned angel investors, also supporting entrepreneurs and innovators from a very early stage, although there are support programs for people to develop their ideas in incubators and accelerators, but really to scale up an innovation, a huge amount of finance is required, which these innovators cannot get it on the market because they're new companies, no track record, and so on and so forth. It seems that some additional steps have to be taken, some of which are taken by different ministries or different parts of the government, but they are not linked to each other. I have one question about financial stability, and I'll come back to this other issue later. I want to ask this question of financial stability from the governor, that the development financing and providing credit to the business sector, although the governor explained that the business sector already receives huge amount of loan, and the loan to GDP ratio in the business sector is very high in Kosovo, But nevertheless, the credit needs of the new enterprises and companies in the green investment sector and many other sectors are uncatered for. And if credit is provided to these various deserving borrowers, does that pose a threat to financial stability? Or is the central bank interested in this wide range of new credit being provided?
Thank you, Professor. Just one more note. I was about to mention as well capital market developments on my first intervention. There are some initiatives working on that, so that would be in addition to the instruments. About the financial stability, let me say that at the central bank we share the view with our board as well that the development financing and financial stability are not competing to each other. They are the goals that altogether can be, with the right policy, tackled. So of course we are in favor of having extended, let's say, instruments, but of course they should always have in consideration that should be a gradual approach of making sure that they are well designed and as well all implications are considered. So if you let me, I would just mention a few points from our view, how we see those processes go on. First, financial stability, we believe, must remain as an anchor. A stable banking system supported by strong capital buffers, prudent lending policies, effective supervision, will, of course, provide confidence to the market and will be an anchor for the development finance. Second is diversification should be gradual and well sequenced. Third point from my side would be that macroprudential policy plays a critical role, especially in different economy circles, when, of course, not always boosting the credit without, let's say, well calibration would be profitable and would be, let's say, efficient for the market. Fourth would be close coordination between institutions. I think here it was well mentioned. And the fifth would be strengthening financial infrastructure. It's powerful enable as well. So we are working on those areas as well to make sure that this kind of approach is well anchored on our financial stability. From the side of the central bank, last year we have adopted how we called syndicated loan methodology. So we are in favor of having financing, but of course not concentrating risk in all spot. But as well, we are revising now law on non-banks, on MBIs, as well, to make sure that they can contribute together with loans, especially for very small SMEs. So this is our view on the financial stability matter. Thank you.
Thank you. I come back to the question of growth and innovation. From the presentation, we did see that although KCFG has managed to provide these loans that have contributed to job creation, 35,000 new jobs have been created, which is in a small market economy is not insignificant. But it also showed that there has been not significant growth in productivity. Really, economic growth comes from innovation and higher productivity. If firms develop production methods and organizations that increases productivity, and that comes, of course, with innovation, new products, new processes, new organizations, and new markets, we won't get this jump in economic growth. So one question is, are there instruments, particularly your experience of World Bank and KfW, are there instruments that encourage and favor long-term growth, and particularly projects that promise increased productivity? Please.
Excellent. And I think the starting point is really like, as also the report and the business performance impact report of KCGF shows, is that it's not only a financing issue, it has a productivity and a structural transformation issue. Kosovo's economy is dominated by small enterprises, micro and small enterprises. Many are in low productivity sectors such as construction and retail. Our recent country economic memorandum also shows that productivity growth at the firm level has been very modest, driven more by relocation across firms rather than within firm productivity. So I think we need to take into account that context. So then, precisely in that context, what's the role of development finance? And I think development finance has to do two things. First, support the growth of those more productive firms, and at the same time, create incentives for firms to invest in productivity, meaning skills, better management, digitalization. So that defines, in a way, what you can do in terms of instruments. So this points to a little bit of a few priorities. We need financing that goes beyond traditional SME lending, no? And equity and quasi-equity instruments, such as private capital or venture capital, are critical to support higher productivity, higher risk investments. So you need that, for sure. Second, you also need financing and instruments that support firm upgrading, which will work on increasing within firm productivity. Upgrading of digital adoption, technology upgrading, and also participating in value chains. Again, this will directly drive this within firm level productivity that is the one lagging behind. And third, as we have seen also in the presentations, targeting matters. Evidence shows that those firms that are exporting firms or more connected to FDI or supply chains actually have higher wages and higher productivity. So prioritizing financing towards certain segments of the firms also will matter. So overall, it's a shift, I will say, if I want to be a bit blunt, from financing the survival of firms to financing the transformation of firms in terms of productivity. So those firms that can grow, innovate, and drive productivity are the ones that will matter the most. A side note, I want to say that green finance overall is not different than any type of finance. But what we need to actually think about is how we assess and manage the risk carefully. And at the end of the day, financial inclusion and stability are not mutually exclusive. We just need to assess the risk, and that's the part that we need to focus on.
Thank you. I go to Mahila, please.
Yeah, I will not repeat any of what you said now. It's difficult to sit next to World Bank because sometimes all the points are gone, but it's okay.
No, the important part is that we're so aligned, you know? That's good.
But I will add 2 more points maybe, or 3. I think the easy short answer is, yes, I think it's possible, in addition to what has been said, if you look at the longer term financing. And it's, of course, not so easy in reality, and you addressed it with the KCGF. I would say in a lot of cases, the financing that is provided due to the risk in certain areas by the market or supportive instruments still is not long enough. So you're not necessarily, if you think of investments, and that's what you want, it takes longer than 2 or 3 years to get them paid off. So you need longer term investment. Can that be done with the existing instruments, or does it need additional instruments is a different question, but it is possible to do it. So you're more looking at 6, 7 years lending, and also not only looking at the pricing conditions as such, but also at the maturity, which is a key point. So I think this is important. That's a short and easy answer. And 2 additions, it is important, and we see that from the countries we work in, it is important to also see what is it really that is the point. Is it really only the maturity? Or in some countries, is it also there are not the right people? So companies want to invest. They want to invest in new machinery, production sites, etc., but they don't have the people to run them. So it may link to aspects as digitalization, human capital, education. So it is also something that is part of the picture and that should be considered. And another example, sometimes there's a need to look at the policies. Do the policies enable or hinder these investments? Especially in green financing, I will try and say it in one word, if it's too much subsidies in the market and the policy environment isn't really supporting investments by the companies, it is an issue. So you may also look at the policies. We have the instrument, I mean, we all have it, the policy-based loan, then that may be part of the story. So just two side notes, in short answer, yes, long-term investments with affordable conditions.
Thank you. Professor Krasniqi.
Yeah, definitely long-term finance is very important for, as I said, productivity gains. But I would like to raise also one issue related to the job creation, because we had a debate with the policymakers and academic cycles here in Kosovo. Sometimes even government grants, donor grants, put as a criteria the job creation, which sometimes undermines the idea of productivity itself for those companies. Of course, job creation is important, high quality jobs, skills, development is very important, but nowadays companies are looking forward to replace as much as they can human capital to become competitive. So there's a conflicting issue here in terms of the granting and grants and job creation and so on. In addition, I can see this market as startups as an underserved group which cannot reach banks and other financial institutions and instruments. And then we have existing companies which further we can divide into domestic and export-oriented companies. For startups, we need a special treatment, especially if we want to, some high-tech sectors supporting some fast-growing companies which will add to the productivity and economic growth in Kosovo, because otherwise, without well-designed instruments, I'm afraid that we are losing a lot of very good and profitable projects that will not be able to see the light and go into the market because they don't have a proper funding. Because most of them do bootstrapping and family finance at the early stage, and there are, as I said, a lot of startup funds to early stage, but there is a missing link between startup establishment and then scaling up for those that has high potential. And we lack the overall ecosystem because we don't have venture capitalist culture, business angel culture, that private sector would take some of the risk of these projects. And under the conditions that we have, I must say, very risk-averse banking sector in Kosovo. I know that there are people from banks, and we have very good statistics in terms of very low non-performing loans, but this tells something as well. If you are very restrictive, then of course you'll be financially viable, but I am interested to see how we could support the bulk of really entrepreneurial ideas that could boost economic development in Kosovo, and especially in some sectors with high export potential. And I see missing piece co-founding mechanisms that are in place even without introducing new ones. For example, if you want to support the high-tech company that is supported even by GIZ funds or LuxDev funds or government funds to develop these initial ideas, then there is a missing link in how we could connect with these instruments and make it the whole package for the startups and for entrepreneurs. Sometimes we go beyond with some ideas without having proper ecosystem. And green financing and green businesses is the same. We have very brilliant ideas in terms of green transformation in Kosovo, but there are missing mechanisms, and regulatory mechanisms that could support successful implementation of these projects. Sometimes we have to take, holistic approach in order to create the proper and adequate instruments, to see the results.
Thank you. There is the notion of the ecosystem, which would include all the institutions and government departments or donors community who each contribute to a small part of this jigsaw. In some countries, I would say in most transition countries, a separate institution has been developed to deal with several aspects of these, the requirements that colleagues mentioned. A development bank, whether it's called development bank or some other name, it's not important, but in fact, in Kosovo there is no development bank. Neither is one in Albania nor one in Serbia, but in most transition countries there is a development bank. So I wonder whether on the basis of your experience you think a development bank is useful, would play a positive role in Kosovo and would meet some of these requirements. It won't become the business angel or the venture capital, but a lot of other things it can do. But there are also obviously downsides to anything that any new institution, which would be at least initially a state institution. So what is the experience and what's your advice for a development bank? Please, Governor.
Thank you. We have discussed this issue several times. It is a government initiative, and we have our view as well. We had very good discussions with the World Bank team while we were discussing this last project that I mentioned on financial sector, which part of it is the development bank as well. In principle, we are supportive of the idea, but within the framework of what we think that would not compete the financial sector itself, because as an state-owned or publicly owned, let's say, financial system, institution would be a little bit different to be anchored well on a private sector concept. But we have come to agreements on principles what exactly the development bank can do, especially to fill this gap on export and other related infrastructure projects. And if that's well governed in terms of governance and foundations, which KCGF is a good example, for example, we believe that it could be productive and it could be helpful to the sector. And I'm limiting myself here to give, let's say, exact definition of what we agreed. It took some time, of course, back and forth, and I think Martha is a witness of that discussion, so probably she can as well complement a little bit. But of course, in principle, it could be playing a positive role. It should not be, take deposits, for example, one thing, and of course they have targeted, as you mentioned, sectors like export and other big infrastructure projects, especially energy, as you mentioned, would be reasonable complementary of existing financial sector.
Thank you.
Thank you.
Martha. Please, Hilep, you.
Thank you. Yeah, again, coming maybe with some practical aspects, because we are a development bank, so we have experience ourselves, and I can tell you, we sometimes also struggle in this setup, and we also have supported other countries. So maybe I look more at those examples a bit. I think you can do two things. You can have an institutional landscape in the country that cater and serve different target groups, different purposes, different aspects of the market. One issue then is you have to coordinate well. And it is a lot of effort to coordinate well, to define the roles, to make sure nobody crowds out. You discussed this in the previous presentation. You can talk very long about those risks. It's an option, but it may not be an option if you move further in the transition phase, and that is was one of your points. The other option is to establish an institution where everything caters under one roof. And now I want to make some points for that. I think one point that is important to note is that it can be a route. So it doesn't have to be, here is a development fully fledged working from next year onwards. Happens in some cases, but very often it's a process to get there, and that really depends on the landscape you have in the countries. So some examples, there's a movement in Ukraine towards that, establishing a development bank. There they are preparing for it, establishing an existing institution, but definitely also waiting for a good point in time to have this transition. One example. We have another country which is still being discussed, so I will not name it now, but where they are thinking of leaving out a certain sector for the next couple of years. So maybe they say, in this case, maybe agriculture, sometimes energy, is so complex and it takes time for an institution to take up this topic, they may leave it out for a few years, have it in a different institution and then merge it. The aim is the same. The aim is to have a fully fledged functional institution, but there may be different routes. That's one point I want to make. A second point I want to make, that's from the experience we have. Development banks can be important in transition phase. Now, from our experience, don't expect the transition phase to ever be over. Where in Germany, KfW was established for the reconstruction after World War II, implementing Marshall funds. We had reunification, we had SME focus, we had infrastructure focus. At some stage we went international. So it developed. We are still there in Germany, acting as a bank, and now we have different topics. So at the moment we are doing a lot of climate finance in Germany, financing digitalization. So my point is, if you think of such an institution, the advice from experience is think in the long term. I mean, for Kosovo, an important step will be entry to EU. It is good to establish an institution which will continue with the purpose of supporting with different instruments. They will adjust, but to function as an institution. And if you allow me 2-3 more minutes, then I can share some experience we have on what are success factors probably. And that's just to run through them and we can go more into detail. But one is definitely to establish a solid legal framework. And a solid legal framework that allows you to, as I mentioned before, be flexible on products and target groups. Solid legal framework includes one important aspect for us. We have a political mandate as KfW, as a whole group, but also as KfW Development Bank. I haven't seen our ministry, the colleague is sitting somewhere. We have a political mandate and there is a political agenda. And you asked the question how, sorry, I don't know who now mentioned it. It is important to also ensure that there is targets that will be implemented. Now, what is important? To ensure that the framework is set up in a way that the operations are independent. And I will say it a bit quietly, but sometimes we struggle with our risk departments and our compliance department. And it would be so much easier if I could say, listen, it is good, let's still do it. But I'm not allowed to, because we have these operational groups in the system that ensure we are credible, we remain credible, and we say we can stay sustainable. So I think this is one of the key aspects, and it needs a lot of thinking. And it's different in every country. And we have examples where development banks was aimed to be established and it didn't work because there wasn't found a good, credible framework. A second point is definitely financial stability. If you think of the longer term, you need to somehow make money to invest and to grow and to enable this, this new product development. That's one key point. For example, KCGF, we looked a lot together at the financial stability. That was a key aspect, just as one institution. Another point is, we name it, I wrote it down here, it says institutional setup including our customer group. The point being close to the needs of the target groups. So in the boards, in the wider groups, governance groups we have established, the target groups are represented. So banks are there, can say what the market currently needs. We are close to customers. So that is a key point. Stay close to the market needs, because otherwise you develop products that are not taken up by the market. And maybe last one I want to emphasize, because that is important, subsidiarity. So it is important to establish the whole setup. I mentioned it can be one institution, it can be also a combination or a route to develop towards one institution, but it is important to ensure that it doesn't subsidize the market. So whatever the market can do and other institutions, banks can do, should be done by the market. but also it includes a role definition of different actors on the market. So maybe I'll leave it there, but for us the important point is if you think longer term, it is important to think through these criteria or success factors, however you want to call them, and design them very carefully and spend enough time on doing that. I think that's the message to start. Thank you.
Well, thank you very much. And I think this is a complex issue overall. And the most important part is to take a step back and think of a small economy like Kosovo, what should be the financial architecture, no, that will help you really achieve your development goals going forward. And I think there are three pillars that we need to think about, and I will answer the National Development Bank question, don't worry. So one is this strong domestic financial system and solid institutions, but here I want to emphasize what has been said in previous presentations, that development finance works best when it complements rather than substitutes the market, and where institutions are strong enough to ensure that that public support goes where those financing gaps and market gaps are. And I think that's the fundamental, no? And that's what will really give you the clear development returns. Second, you also need mechanisms that crowd in private capital, including foreign capital. And this is especially important, as I said, in small economies like Kosovo, and also thinking about integration, regional integration and access to EU, as has been said before. And it's not only finance, but also trade. An initiative like what we are having together with the Western Balkans Trade and Transport Facilitation Program can actually support that, because it will bring you the scale that you will need to actually support your development needs. And third, this set of specialized institutions, which will require a lot of the coordination, because that will go back to having like the same goals, the same policy objectives, but these institutions can address different financing gaps. KCGF clearly has doing their role in addressing the MSME collateral needs. You have the Energy Efficiency Fund now, you have the Innovation Fund that is really operationalized, you have done changes also to your legal framework towards FDI, SME development, and innovation. So all of the foundations are there. But at the same time, the financing gap remains, not only on MSMEs, but also on these large investment projects, the critical, where perhaps they exceed the risk appetite of the current market. And this is where the financial sector development project that we have been doing jointly with the government of Kosovo can bring actually additionality. And I think that's the other part that I would like to bring forward, the need of additionality in all of what we are doing together. So it focuses on, of course, scaling up KCGF, particularly to women-owned business and also startups and exporters, underserved groups where you have a market gap, while also modernizing the payment systems, which will help with regional integration, as it has been said by Government Minister Emaeli. And then the third part is related to the National Development Bank. And here I want to emphasize that the experience also shows, as also Hile has been mentioning, that those development banks that start with a clear mandate, a strong governance, and a focus on additionality and private capital mobilization, those are the ones that actually make a difference. And I think I want to emphasize that very much. And finally, I think one of the aspects, particularly for Kosovo, is that a non-deposit taking National Development Fund could help channeling these financing needs for their larger investment projects. But again, with a clear assessment of market gaps, a clear additionality, and a clear role in trying to bring private capital going forward. So I will stop there.
Thank you. This is very important conditions that you added to a development bank. Professor Krasniqi, your comments on a development bank.
There are pros and cons in terms of the development bank. We as economists, first of all, we are concerned about the market competition, but of course this depends largely from the design, how we design this bank and the mandate, as was saying here. For example, there are development banks that serve to final customers, I mean businesses. But there are banks, for example, as KfW, which I read about it, that have indirect loan to the banking system. And this brings us to a discussion of very important and critical issue, referring to the political risk of, especially in countries of like Kosovo, Western Balkans, in weakly installed institutional environments, when we could have political interference. I think if we go for the developed bank, so I would choose the model that goes through the indirect lending to the businesses through the existing banking system. And second, I would like to see how we could, define the role of credit guarantee fund, or whether we could use the existing structures that we have in place to develop instruments that are pretty much the same as a development bank, because the Finera, as they said, they are credit guarantee fund, but they have some function as a development bank, because somebody should calculate also the cost of running this bank. Otherwise, there are a lot of opportunities to finance through this bank. Long-term capital, which was missing, as we said in the first part of our discussion, could be channeled through this bank, especially during the crisis, or supporting specific sectors that are really critical for economic development of Kosovo. We have international examples that are successful, mostly in Europe, and we have also other international examples that are complete failure. For example, in India, in the South America, in Brazil, they ended up, financing friends and family through these banks, which is really, really high risk. Even in some more advanced countries, like South Korea, for example, they have problems with high concentration towards specific big companies, like Samsung, which is, a big family firm, very competitive and very important. I think it's more about how we design it, and what will be the mandate, and how we take care of all these issues, and how we could integrate the existing mechanism without making any distortion to the private sector. And of course, finally, I wouldn't like to see appointees by government or through the government officials to decide about the loans for businesses at the end of the day, which of course, in that case, will be worst case scenario.
Yes, thank you very much. I think we have about 10-15 minutes, and I would like to open the floor to colleagues from the audience and asking questions. I'm not quite sure how we can read the questions. Maybe you could
Yes,
read the
thank you,
question,
Professor.
please.
So, as we provided the possibility through QR code, there were plenty of questions, but we selected 4 of them. So the first one was, what financial instruments or risk-sharing mechanisms, like credit guarantees, have effectively unlocked private investments for SMEs in the Western Balkans? If you would like to answer.
Well, let's see. Kosovo Credit Guarantee Fund would answer that question, that they have unlocked a lot of investment for SMEs in particular. But I'm not quite sure whether that question is relevant really to this discussion, because it asks for specific instruments that have unlocked.
So perhaps we can continue with the second one.
Please, yeah.
How can central banks, guarantee funds, and institutions like the World Bank better coordinate to drive impact and escape the middle income trap?
Well, have a
Yeah, I cannot fully respond, I'm sure, but maybe give some indication. I mean, we can always be better, and we can always coordinate better. But that having said, I think the KCGF is a really good example where we did coordinate well and are coordinating well. And maybe one success factor is to have institutions, instruments that allow to pair up For example, there is an agreement also between the German side, the German Ministry and KfW and the World Bank to look more for options where we can pair up and coordinate. On the other hand, it also so it requires a will to do it. It requires a mechanism where we can both bring in some added value, and it requires a partner who wants that. And I'm saying that because in Kosovo, with the KCGF, there was a very strong coordination role also from the KCGF side. We have other examples in other countries where it's more about where can we get the better conditions and how can we get the best out of everybody. Then it's very difficult. Then we can in the end say, okay, we don't do anything, but it's difficult to coordinate. So I would say institutions have to agree, mechanisms have to be available or established or whatever, and there needs to be a partner who wants that. Maybe that as a start.
If I may add, on the broader scheme of things, I think it's across the globe it's recognized that the financing needs are huge, and none of us individually will be able to assess them. So I think that's where it has changed the whole incentives of how we are working together. So as Hide was saying, even today, right, we are going to be discussing other countries, Moldova, et cetera, but overall I think as an institutional level, we have much, the incentives are towards coordinating more, but also thinking about global platforms, and when we are all bringing together our different set of expertise, and ex ante, we can bring the capital towards the countries. But the reality is true that while independently of the incentives, what is important is this is a demand-driven approach. So having an excellent partner in country matters significantly. And I think that's where Kosovo is in a way in a privileged position, because we have such a strong partners in the government of Kosovo and also from the private sector perspective. So I think this is where we need to think collectively. But the instruments are there, and the incentives, I will say, have changed going forward, including for working across institutions.
Of course, a project or program that requires coordination of all these must be large, by definition, large infrastructure projects and things like that, which a variety of institutions have to contribute to it. Governor, would you like to add something on this point?
We should not forget that we live in the same environment. And even though we have specific mandates, we have to combine this for the purpose why we exist. So sometimes, I think in small countries, this is very relevant as well. The coordination is not at that level that we would like to. There are good examples, but I can tell you that from the level of the central bank, with the rest of the government, we have well understanding. We try to coordinate as much as we can, especially to the effects on the financial sector side. And of course, we advise whenever we are not involved directly, what would be the role of the central bank. So for us, coordinating locally between institutions first, and the second, of course, with our donors and international partners is critical. And I fully agree that ownership is a key word here. And without a strong institutions, with a strong, human resources as well, it's very hard for someone who is, willing to help you to make you deliver. So in our case, I think we have expressed that we have really functioning institutions, and some of them can deliver, and you see the difference between. But working more together, aligning more the objectives is something that could be improved significantly. And I have seen last several years a positive trend in that regard.
Great, thank you. Maybe we go to this last question.
Yes, we continue with the last one.
Please.
How can other external financing, DFIs, EU, private capital, be channeled through KCGF via guarantees or blended finance to boost SMEs, and what gaps remain?
The question is, should all these other financing go through KCGF, or is another institution like a development bank the right place? Any comment on that? Professor Besnik, you haven't said anything in the questions, please.
Maybe I see this more as a
We can't hear you.
supporting mechanisms that could work as a blended instruments together with the KCGF. For example, we have numerous financing support programs for startups, for existing SMEs, even for exporting companies within the Ministry of Trade and Industry. But unfortunately, these instruments do not communicate effectively with each other. So we need to see how we could combine. So if there is an instrument in Ministry of Trade and Industry that supports exporting companies in machinery and equipment, then how we could, merge or attach to another instrument which is provided by credit guarantee funds. We have also, we need also to think how we could introduce more incentives, even fiscal incentives for business angels, and then we could do a crowding in of the private sector capital into the businesses and combine these instruments together, which will be more powerful for businesses. Now are very fragmented. I mean, all instruments we have, they are almost standalone and do not communicate effectively.
I agree. Maybe that is one part of the question on, is it good to have different instruments under one roof? Because you can coordinate, as we said before, different organizations, that's fine. But it would definitely make it easier. And one added value I would see is also that you could best choose then, so it can be a decision from the lender, from the receiving institution, you can best choose who brings in which added value. So what else do you need, whom else to approach, who can bring in what is already there. So I think this all development institutions, also national institutions, they all bring different expertise and financing options. We have different instruments. So I think that would enable a coordination. And I would like to make a second point. I think with the KCGF, you have a very good example where this is easily possible. So being trained a bit in acquisition, raise your hand if you push the question, and please approach our colleagues from the KCGF, because I think there is a good option to add financing.
No, I think just complementing that, because I fully agree. I think KCGF right now is well capitalized, and the question is now thinking about better targeting going forward and really thinking about the complementary instruments. No, how do you connect better instead of having a fragmented scenario with the other one? So I think I will stop there.
Yes, one last comment. I think we have to understand that KCGF is not a financing institution. So they are not going, following the demand or the market necessarily. So they are not the first line, so let's say. Of course, there is funds and they are quite proactive, but again, the banking sector is the one that is directly facing the customer, and if they do not generate from there, the requests will not come to the fund. So if you deploy a lot of financing to fund, that not necessarily will be converted to growth, because there is a process in between. And one thing about the coordination, when the idea of development bank was discussed with us, the first thing that we asked, and actually I asked, was do we need it, why we need it, etc. So that's why we agreed with the Minister of Finance to discuss with the World Bank. So we say, we need to know the best practices, examples, financing gaps, the mandate, the infrastructure, the architecture, etc. So, that was not moving forward without having all of those details, and I'm grateful that the bank then decided to work on this technical assistance on that. And then when we had this documented well, and we discussed it, then we tailored a little bit what we like and what we can. We, put the arguments on it. Then the structure, how it could look, ended up to the program with the World Bank, to the project with the World Bank. So I think the coordination is not only the matter of being well in communication, but analyzing well what is around, what could be utilized. If you have something existing, why not amending it? I well remember the time when during the COVID I was in other parts with the Treasury of the state, what we discussed with the KCGF, then they had to amend their mandate to respond to the needs of that time. Instead of having direct support from the budget, which to us was a little bit not suggestible, why not then, since you have an instrument ready, let's say professionally driven, then that was more a choice of using KCGF, and I think the results then later on tells us how important that was. So this is, to me, coordination is much more as well in matching and with what you have resources in countries, the specifics, in a small country, lots of institutions, it's not the best advice. But however, it could, for example, guarantee the fund of energy efficiency fund, for example, has a very specific mandate. Of course, it is attracting funds, but they go to completely different sector. Could it be within the guarantee fund? They would have to amend a lot of their mandate. Would that be then, doing something else? Yes. So this kind of, assessment brings to that coordination that I'm referring to. Thank you.
Thank you. I think the issues related to bringing all these things under one umbrella is, again, similar to the issue of development bank. And otherwise, KCGF would be a development bank if it takes on all of these projects. Is there any other questions? No.
These 4 were selected, but there were many others.
Okay.
But because of time, we selected these 4.
That's fine.
As we are now going towards lunch.
Anyway, we have run out of time.
Thank you.
1 minute. I would like to thank the panelists for sharing with us their expertise, knowledge, and thank the audience who asked the questions. I think we bring this session to an end, and I'd like to thank the audience and KCGF again. Thank you.